All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the day. Happy Friday. Been an interesting and I'd say again pretty volatile trading week. Right. We've had some good price action. We've had some bad price action. We've had some crazy moves on literally just like two immature people tweeting about each other. We've had a lot of economic data here this week. It's been a pretty full one, right, all things considered. And kind of still finding a way to finish most of these days green. And kind of like keep batting away, right, at some of the price action. And hopefully, right, kind of find the opportunity that we're looking for. Still effectively just PA that doesn't really want to move here too much. So if we're looking at right like a weekly candle range here, we're pretty much 3 weeks right inside now this like first week of May, and it definitely feels like that, right? Price action is almost like teleporting through some levels, right, and then bouncing all the way back. That's kind of the theme we've seen a little bit here. And yeah, we're waiting right for that long-term consolidation to sort of figure itself out. And then once it does, right, hope we can get kind of back to trending markets and an easier opportunity, right, to maintain our level of aggression. The reason, right, why trading has been going well over the last little bit is because there's an emphasis, right, on losing as small as possible, right, and being willing to take more than one shot at an opportunity if the timing just isn't absolutely perfect. So we're putting ourselves in situations, right, or trying to put ourselves in situations where multiple losses, right, aren't going to sting, and it gives us a increased probability, right, of actually being able to catch that move inside choppy conditions. So to a certain extent, right, the price action that we've been dealing with here over the last 3 weeks, it really has been a significant reminder, right, that your win rate is not important if you focus on keeping your loser small, right, and you're able to add to your winning positions or close your winning positions, right, as your P&L is increasing. So consistently focusing right on those variables has had a lot of positives here, and it's definitely created an environment, right, where it's been pretty or there has been like a rewarding trade available pretty much each and every day. But it has not been an easy trading environment. I think that it's been quite a frustrating one. It's been quite an environment, right, where it's kind of easy to be on edge. I think it's a situation, right, where trading is a lot more fun, right, when you have trending markets instead of literally like micro range markets, right? We're not getting any significant kind of separation higher, right? Not getting any significant separation lower. And so even just bouncing between it's kind of targets, we're getting, less than 1% of range, right, over the last like 5-6 days, or maybe 1.5%, right? So we just have to be very patient here, and not allow that to frustrate us. And the way that you do that as a trader, right, is by being proactive, not reactive. So, you're struggling, right, or you're not happy with how choppy the market is. It doesn't mean you have to go all in, right, on each individual trade. If you're not happy with how you're trading price action in the first 15 minutes, cool, right? You don't have to play those trades. If you're feeling impulsive, right, and you're trying to revenge trade ideas, or you're chasing breakdowns that happen, right? Fundamentally, that's still a choice, and you don't have to make that decision if you want to maintain an element of profitability. So, look, trading is very much controlling the variables you can control and learning how to gamify those processes so you can continue pushing yourself here on a daily basis and focus on getting better and better and better. I think about this all the time, and I'm sure I've mentioned it on the stream before, but the hard work in trading isn't the trading part, right? The way that you make money as a trader, yes, is in the execution, right? Fundamentally, but realistically, right, you make your money by the work that you're putting in outside of market hours or outside of trading hours, and how you choose to improve your technique, right? So the more that you study your patterns, the more that you analyze and visualize your trades, the more that you basically ask, okay, what am I doing well? What can I fix? What do I need to focus on for tomorrow? The more your trading is going to improve, and the faster you're going to achieve, right, the objective that you're looking for, and to maintain that consistency, right, that's going to generate that sort of long-term trading results. So yes, right, executing trades is fun. It's the fun part. That's the reward for us doing the hard work outside of trading hours. And we need to really put a lot of accountability on ourselves, right, to make sure that we're always doing those bits and pieces, because ultimately that's what makes you better. If you have a trading problem that you're trying to fix and you're not tracking that and you're just hoping that it's going to turn out better, nothing is going to change. Or you're going to take a 1 week or 2 week process and turn it into a 2-year process. And neither one of those outcomes are particularly ideal. But if you can do something in 1 week, I wasn't going to fight through a sneeze that time. But if you can do something in 1 week, right, instead of in 2 years, you got to take the 1 week solution, even if that means, right, you're spending an extra 15 minutes a day just to be able to break things down. So, kind of the moral of the story here, right? Trading this month has not been easy, right? And I'm saying May onward. It has not been particularly easy. It's a market that does not have a very large range, and it's a market that's faking out, right? A ton of entries. Now, you don't know when it's going to fake out, right? So the alternative to that, right, is to take multiple shots at trades if conditions continue to be consistent and you see fake outs occur, like happened to us multiple times there yesterday. But to make sure that our position sizing, right, is small, that we're cutting our losers aggressively so that we aren't going all in or all out, right, on a singular decision. And we're giving ourselves multiple shots, right, to execute the entry timing once or twice. The other element here, right, is that if you want to improve as a trader and you want to build confidence in your technique, you do that with the work that you put in outside of market hours. So the more that you're studying on your trading, the more that you're reflecting on what you're doing, the more that you're submitting trades for feedback, right, and studying them and asking yourself, what am I doing well, etc., the sooner you're going to start to find confidence in your daily process, and you're going to be able to cut losers faster, right? You're going to be able to walk away from winning trades as their P&L is peaking, and you're going to start to see your P&L catch up to the work that you're putting in the background. Showing up in trading isn't enough. There's too many other people that are working harder than you, right, and working harder than me, and we need to at least match, right, their basic work ethic. So, that just want to be a quick reminder here on the Friday that right now it's a good capital preservation Friday, right? We've seen some pretty volatile action all over the place, every which way, but also, right, that this is a period where learning from your trading and trying to get better sucks, because the results don't feel as if they're necessarily like a day behind or anything along those lines. But it's an opportunity to build up skill sets, survive, right, get better, focus on improving technique. And then once markets get back to trending conditions here again, all of a sudden, right, you're going to have the skill set and the ability and the confidence to take advantage of that trend from start to finish instead of catching up your skill set and then hoping, right, we put together a couple green days in a row. So all things considered, we've had a lot of opportunities to maintain green. We've done that. We're just doing it the hard way. And for now, we have to maintain the elements that are keeping us successful, which is good risk management, which is good review habits, right? Which is good position sizing. And hopefully, right, we can continue building out from there. I've got a couple things that I'm working on here in the background to continue to basically make that process as transparent as possible. So bear with me here as I start to drop those things in the next little bit. And again, right, I want to make sure that everyone has the tools they need to be able to put in the work that will help them elevate their game and to help them take their trading as seriously as possible. All right, enough of that. Let's start mapping things out here. Let's figure out what we want to do here this AM, and then let's go from there. Relatively smooth economic calendar here today. We've got some a little bit of Fed speak, but nothing too crazy. And then really like the main bit on tap, right, if you want to call it that, is are Trump and Elon going to tweet away again here today and create 150, 200 point moves in microseconds? Not super interested in that if that's the case. But yeah, let's figure it out. So good morning, everybody. Hope everyone's doing well and are ready for what should be a great trading day. And yeah, let's get after it. So first things first here, right? What's the count on ES? Let's start there. Yeah, 2 out of 3 to the downside there with volume spot on, right? Pretty aggressive looking rejection there yesterday. Kind of maybe a little bit similar to that Thursday, the 29th, right? Was also a Thursday. I don't know, maybe that's like a little bit galaxy brain. But we're at a spot where we need to break out, right? Or we need to reject. So at some point, right, this ascending wedge has got to turn into something. Either like a failure spot, right, or a breakout spot, and then we can be, maybe a little bit optimistic. Yeah, for sure, Rusty. No problem. And yeah, so 2 out of 3 to the downside with volume. I'm going to try to do a bit of content on the pyramid here this weekend to add to the how to trade like a DTR member. So I'll increase that process or make that video, sorry, and try to like highlight that process a little bit. And then obviously if I do add in my positions, try to be thinking about, basically how I'm talking about my position sizing just to make sure everyone has the information they need. So we have a possible ascending wedge breakout here. Now, maybe the reason why I'd be a little bit pessimistic of that happening here today, right, is that we have an implied range of about 1-ish%, right, something along those lines, with the VIX at 17.12, and markets are already at that upper end of sort of that like implied volatility range. So maybe a little bit challenging for us to get that breakout here. But if I do get that ascending wedge pop, yeah, for sure. That certainly would be interesting. It wouldn't maybe also be surprising for us to get it here today. We're going to have the roll week, right, taking kind of hold right next week a little bit there. But this for me seems like a pretty obvious rejection spot to look at as a starting point. And then once that rejection, right, either happens or it doesn't, we can kind of break things down from there. So our starting point here to the downside would be 59.29, so 59.30 approximately. That's 70 points away. That's probably a little bit too aggressive. Let's call this 59.20, right? Or sorry, 59.50. And then look for a continuation breakdown there, right? And see if we can get a nice little pop. Okay. NQ, right? How do we feel? Similar, not so similar? Yeah, same thing, right? 2 out of 3 to the downside with volume. $929. So we'll call it 900 as the starting point to the upside. Again, same thing, right? Maybe the move here has happened overnight. Want to be maybe a little bit cautious, right, of that, or of chasing it here too aggressively. Again, I could probably call this like an ascending wedge breakout. Kind of your trend line there. Or maybe it's kind of more like that, something along those lines. And then you've got your other point of resistance to be here-ish. Kind of like a wedge breakout type pattern. Would need to get over 951 approximately, right, for that to be the case. Or alternatively, right, we've seen it reject here off of these zones and then push back down towards the lows. So we'll say, again, kind of like wedge breakouts, right? Question mark. And then bull case Ontario, right? We're looking for a 21,950 kind of breakout. Cool. And then to the downside here, right? Targeting 21.5 as our starting point, and then we can kind of go from there. Make sense? All right, sweet. CL, how do we feel? Annoying, not so annoying? Hey, welcome back, Jack. Great to see you. Like if this doesn't sum up the week well on pretty much all the indexes, right? We're stuck, yeah, at that 64, like Ajay is saying, right? So we're still looking, right, for that breakout here. I don't see too much changing from that perspective until we get a break and hold of that area. It's gonna be pretty hard, right, for me to want to do anything interesting here. It's one, two, three, four, 5 rejections now. So this is kind of like a nothing story until we get that breakout or just a conviction or high conviction reversal, right? So I'm being pretty patient here. No reason to do anything aggressive. Excuse me. All right, Apple 2 out of 3 with volume, right, to the downside. Big gap up, but opening in a relatively large candle shape. Wouldn't be surprising, right, for this to end up as an inside bar here today and then effectively consolidate for the entire session. Tesla, oh my God. They got absolutely hammered. Opening up in the implied middle of that range, right? Let's see if this thing wants to behave interestingly enough. But yeah, crazy move. All right, Microsoft, 3 for 3 here to the upside, right? Kind of an interesting play. I was watching a video yesterday there on Steve Ballmer, one of the Microsoft guys, and he said he makes about $1 billion a year in dividends from Microsoft. I was wildly jealous. All right, Amazon, a red candle, increasing outlier volume gap up. Now the gap up is like testing or teasing around the previous high of day, kind of potentially invalidating, right, some of that selling pressure from Amazon to a certain extent. So this is interesting. I mean, this is a 2 out of 3 to the downside with volume. Okay, AMD, right? Bearish engulfing candle, bearish engulfing on volume, opening up in the implied middle 2 out of 3 here to the downside with volume, and this is for sure setting up as an inside bar. Hey, good morning, SG. Okay, NVIDIA, again, 2 out of 3 here to the downside with volume. Maybe a little bit of a stronger gap up, right, than what we just saw there on AMD. But again, I'm not like super enthusiastic about these tickers. Yeah, well, let's see how these stories basically want to sync up. All right, Meta, red candle, decreasing volume, gap up, higher high, higher low relative to the previous bar. So 1 for 3 there to the downside, pushing 700. Kind of looks like a cup and handle breakout now at this point. All right, Netflix, 3 for 3 here to the upside, back-to-back days of 3 for 3s. And kind of like a pathetic looking cup and handle. Could definitely give us a little bit of a pop here at some point. But yeah, let's see if this thing has any level of enthusiasm. All right, Google, red candle, increasing outlier volume, gapping up to its give or take highs. Annoying, I would say, that gap up, right? If you're going to be a bear, not exactly telling you a very high conviction story, gives you an opportunity to basically create that bear squeeze pretty easily here, right? Or bear trap, right? Where it ends up being a bit of a short squeeze as everyone's liquidating and liquidating at kind of like really bad prices because they're offside already. So yeah, 2 out of 3 to the downside with volume. And that's it. And then we already talked about the VIX-Aruni a little bit here today, 17.13. So an implied range of about 1%, a little bit more than 1%, but you know, that's kind of the give or take. Indexes are already pretty much making that move here pre-market. So how much more juice to the upside do they still have? To be determined. What I would really like to see here today is if we're going to get like a breakout trade, for us to give us a breakout from the Bollinger Bands, right? And basically do that on volume to indicate that there's like, we're breaking out of our average kind of consolidation zone and we're breaking out with enthusiasm, right? I want to see basically like a little bit of a personality shift here. And if I can get that, right, then I should have a little bit more confidence or conviction that I'm going to get some easy follow through. A couple things right before we kind of finish off the day or the morning's prep. I want today to be a calm day, right? My last 2 Fridays have not been calm, right? I've been kind of like annoyed with how I've traded on my last 2 Fridays, and so today I'm going to be like overcorrecting for that to a certain extent, and just like really making sure I'm not doing anything stupid, not getting stuck in anything dumb. And if I do take trades, I'm like my focus for today or like how I'm going to judge myself is how quickly I cut my losing positions, right? So if I can turn a $500 loss into a $200 loss, I'm pretty happy with that. I'll be happy to take 3 $200 losses, right? To get the timing right if that's what it takes. But I just don't want to get stuck in a position where I either like pyramid into something and then it goes offside, or I spend 10 minutes in drawdown before it ever runs in my favor. I'm super anti that here today. I don't want any bullshit. I want a smooth Friday. I want a nice, clean trading day. I don't want any drama or anything along those lines. And I don't want to jeopardize my winning streak that I'm on, right? I think I'm on 8 or 9 green days here in a row. So I want to push that to 10 at the very least. And then we can think about 15 or 20. So I need to make sure, right, basically that I don't self-sabotage myself here and I don't make my job more difficult than I need to make it. I have been making it difficult for myself here a little bit. I've been taking the long way around the mountain. So today I'm trying to find the easy trade not just the first trade, and really putting a lot of energy into that. And then, what that really looks like, right, is waiting for the market to give me a clear indication of direction. And instead of trying to catch that directional breakout from the very low or the very high, I'll be willing to do it from, like once 2/5 of the move has happened, right? Or like where there's a little bit more separation, and maybe I'm taking a chunk out of the middle instead of trying to catch the top and the bottom. So being very patient here this morning. Been trying to be very deliberate here this morning. Mixed up my routine a little bit, right, with how I started off my Friday. So let's see how the day kind of comes together, and hopefully we can have ourselves a little bit of joy and a little bit of clean price action and finish off the week here with a bang. So like I said, right, I want to make today easy, not necessarily validate myself from a P&L perspective. If I take it easy, if I watch price action appropriately, I'm going to make money. If I don't, and I force myself into like trades or refuse to admit my losing trades or losers early, I'm going to make problems worse for myself. And then I'm going to create more work, right, where I've got to spend a longer period of time reviewing my trades instead of being able to be happy with my trading process. Got 2 weekends ruined in a row. Not going to make it 3. It's kind of like the worst type of hat trick. So let's finish the week strong and absolutely crush today's trading day. Any questions here going into the session? No, we're good. All right, I'm going to take that as we're good. All right, so market's open here in 15 seconds or so. Already got my coffee, like I said, routine changer here today. And let's see how things sort of shape up or where things come together this morning. Let's have ourselves some fun here today, team. All right, so how do you feel about the size of this opening range here so far? How do we feel? Yeah, so far, not particularly enthusiastic. Again, guys, if it's like a bullshit day, there's not much going on, I'm not gonna like go anything crazy or anything along those lines, right? Been a good trading week. I don't have to do anything nuts. So I'd rather be disciplined than forcing something that isn't there, right? There's more value for me in turning this green day or these green days right into a green week than trying to turn this green week into like the greatest week of all time, whatever, right? So kind of like, you talk about once you're green on the day and you've had a bit of work and you've already been trading for a while, the risk reward ratio, right, of turning a green day into a red day is kind of like disproportionately skewed, right? Where, yes, maybe the odds are the same, but the feeling that you're going to have, right, turning a green day into a red day or a green week, right, into a red week is going to feel worse than adding an extra $1,000, right, or a couple $100 or whatever it might be, right, to your bottom line on the day. So a lot of that kind of same feeling to a certain extent is in play here. It's been a strong week. I don't want to finish the session, right, thinking about, oh my gosh, like, why did I do this? Like, I'm such an idiot. That's the feeling that I want to avoid here as much as possible. So I'm talking about this a lot, right? So I can remind myself and not get into a zone, right, where I'm easily greedy. I think that has been a little bit of my Achilles heel recently. Yeah, and Mark, that's a good point, right? It is one of the hardest lessons because I think most of us, when we start trading and we get into trading seriously for the first time, we optimize for the wrong thing, right? So we optimize for P&L and we're trying to make every decision, okay, how much money can I make here? Oh, if I just keep working really hard and keep pressing, I'm going to keep making a lot more money. When in reality, right, the best way to make a lot of money trading is to optimize for freedom, right? And to optimize over basically being in control over your decisions. Because the more that you're setting yourself up, right, to be in control over your time, in control over your processes, in control over, basically how you manage your psychology, easier it is to stack up wins and to compound money and then to actually enjoy those rewards, right? Instead of becoming addicted to just watching price action, right? And needing that vindication. So we all trade, right? Because we want to own our time, or that's a huge reason, right? We want to have that career flexibility. We want to have that time flexibility. We want to have that location flexibility. And so the sooner that we can start practicing that and kind of like living our why, the easier it is to kind of associate, right, good disciplined trading habits with like a positive feeling, right, with life is good type sensations. And that makes it easier, right, to want to survive through some of the challenging kind of bits of price action or some of the areas, right, where things can be frustrating. So my recommendation to everyone, right, is to always optimize for freedom first and then P&L second. And if you do that, right, then you focus on your study habits and you're really deliberate in how you're analyzing your trading, you're going to find a lot more success than if you're optimizing for a P&L number first. And you're going to feel a lot more satisfaction, right, with sort of your daily trading process. I mean, so CL is probably our most interesting here. You probably look at this as a 5-minute breakout through that 64 handle. So our setup in this situation, right, is not the opening range. Our setup here, right, is a breakout through 64. Now our target would be 64.50. So it would probably require the aggressive entry technique. The pullback here would be very unsatisfactory. Just a little bit too late. So now, right, we want to see it break out above 64.50. That close at 31. Yeah, I can't. And index is kind of a nothing day so far. Fake out lower on or on NQ, possibly a fake out higher there on ES. CL finally giving us a possible breakout. Okay, 90 seconds. Still can't get over how yeah, Trump and Musk were feuding so publicly yesterday. It was so wild. Crazy. Yeah, it's back to 300 in a heartbeat. Yeah. Yeah. It's it's pretty embarrassing, yeah. You got to be careful with that, Logan. We got a few Edmontonians in the crowd here today. All right. We get increasing volume here on this as well, actually. Again, back to looking. And now, right, we'd be targeting 65. So I don't think I'd want the pullback here, right? I'd probably want the aggressive entry technique. So 64.52 stop loss. One thing that I did yesterday that I liked a lot on my big winning trade is I used the aggressive entry technique in the middle of the confirmation candle. Basically, like once price action started behaving well, I kind of like jumped in, right, and then was able to have a stop loss still at like a reasonable point. What I liked about that as an entry logic is that it kind of gave me like fake out insurance. So if the move failed to break out above that candle's high of day or candle's high, theoretically, right, I would have already been up 10 cents or 5 cents or whatever the number might be. And it kind of gives me a maybe an easier trade to protect. So it's definitely something I'm thinking about a little bit here. But yeah, short term, still just looking at that 64.50 here as a stop loss. And that probably would have been the only time, right, to have gotten an entry on that idea there so far. Not chasing this, right, until I get an appropriate pullback. Shame. Okay, so still watching here. Okay, so watching closely. Not a great, I would say, candle close there, right? Couldn't hold higher highs. So wait it out probably. Interesting from NQ as well. I might be able to play this as an opening range breakout trade. Okay, so I'm watching NQ here for sure. Stop here would be 828. Let's see if this thing can find some support. Okay, so I'm for sure watching here. Hey guys, I am in average price, excuse me, 21,841.75. I have 3 contracts and my stop loss here is at 828. 841.75. I'm not sure why I didn't hear that ding. Just watching this carefully. I don't like this little pullback here back towards my entry price. That's not super healthy. It's got to close strong or I got to get out. Not a close strong. Okay, guys, I'm out, right? That was not a strong close. So I've closed that trade for a $227 win. I will try this again, right? If it wants to set up nicely there on a longer time frame. Maybe a bit shit luck, but did not follow my post candle, right, entry rules. So once I enter a trade, right, I want to see that candle close with increasing volume, right, a strong candle shape, and for it to hold higher highs. I can't say that that's increasing volume. I can only say that that held higher highs. Every other element of that trade didn't show me signs of strength. So gonna not hold on to that. Exit price on that was 845.75. So not a huge win, right? But a good processed base start to the session here. And we'll take it, right? All right. Nice work, Nick. Sorry, I was just filling in my journal there. But a nice calm start. All right. Feel better about CL for sure. Feel better about CL. All right, we'll be right back here. Team's going to fill up my cup of coffee. All right, how's everyone feeling? Chat's slow this Friday. What's going on, guys? Okay, not enough volume there on that 5 min. Hey, Nautilus, take it and run, man. Take it and run. It's a great day. Take it and run. How'd that first trade go for you, Rebecca? What was your entry price, John? Hey, thanks, Nautilus. Yeah, look, green days, I say this all the time, right? Green days turn into green weeks. Green weeks turn into green months, right? Green months turn into FUs to your boss. Right? That's the game. Interesting. I don't see anything bad from a sound perspective on my end. Okay, John. So at that 48, right? That's a trade that you can't enter in on. So if we're looking here, right, and we're boxing in this trade, it would have looked like this, right? So stop loss was at 928. You cannot take a trade when the entry is outside of the risk reward zone, right? So if we're entering outside or above this green line, we no longer have a positive expectation of being profitable on that decision. We need to make sure that we're getting under that green line and that our position sizing, right, works within those contexts. So had you got an entry at 44 or 40 or 41 like I had, you would have been okay on that trade, but your entry there is too far outside of what the reasonable margin should have been. Your objective, right, guys, when you hear me call out my entry, is not to chase it, right? Because you're always going to get a worse entry than me. It's to look to outperform it, right? By seeing it retest under that price, right? Or getting a tighter risk reward ratio by a secondary entry. So if your objective, right, is to wait for me to say that I'm in my trade, you are not copying my trade if then you're chasing it and getting an entry or 8 points higher or 7 points higher. Just to pick on you a little bit here, John, sorry for this, is the difference between, right, my decision and your decision is an extra $120, right, assuming no slippage. And then the difference, right, between now your trade and my trade here today is $300. And so that's a $300 difference that didn't need to have existed. And you would have been able to get that reward more on your end by taking the entry price, right, and looking for a pullback either at that same price or underneath it. So I don't want to see you guys chasing my trades because that leads to worse results, right? You're going to make less money when we're right, and you're going to lose more money when we're wrong, which is the wrong ratio, right, to kind of fall in love with. It should be taking the information you get and then looking to outperform those as benchmarks. Does that make sense? Okay, not enough volume. And remember, guys, right? It like progression in trading, it's not, you're not going to go from being a perfect trader on day 10, right? You're not going to go from 0 to perfect right away. It's a progression, right? Or it's like it's steps, right? So the way that you're going to get confident with your entry timing, right, is taking my baseline and trying to get better at it, right? And then once you start to do that, and you start to see the P&L kind of come together, and you start to see things more replicating, right, what I'm doing. Now you're going to have context, right, around your decisions. You're going to feel calmer, right, as price action is pulling back or as moves are moving away from you. And you're going to be able to look at your entries from a more rational perspective, and then be able to be more precise, right, and to be able to improve from there, right? So I'll make a video on this as well, right, this weekend. I think this is a good topic, but don't chase my entries, because the second you chase my entries, we're no longer playing the same setup. Your position sizing is going to be different, and mistakes will be exaggerated. Either use my reference price, right, to look for entries under that, which is what I'm doing, or wait till you hear my price and then look for a better entry relative to that. I love the volume candles too, Rebecca. I find myself to be such a visual learner that it can be a pretty fantastic addition here. Okay, so we have an NQ breakdown potentially. Not super convinced by this. I don't like how it basically got stuck at 800. Because it could just be finding support there off of that mid-range, maybe a capitulation move into that. So I'm going to pass on this burden of confirmation to the 5-min time frame and just slow down my process here. Maybe Michael on Tuesday would have chased this. Michael on Friday wants peaceful margaritas. And again, all things considered, right? I think we made a really good decision closing our trade where we did. I have no issues with that exit. That was fine. Right? The reason why we use that difference. Yeah, it's pretty clear so far, Greg. No complaints. Did like my first run yesterday in not quite the Alpine, but like getting up there a little bit. And you could smell how dry it was. So I'm a little bit nervous about that. But sorry, the reason we use those 3 candle triggers, right, to know if we should continue holding our trade or not, is because it tells us, right, that price action is likely to either like fade away, right, or become uninteresting. We just don't know when, right, that's necessarily going to happen. It just means that that's probably the next most likely move, or once you get that that lack of enthusiasm, right, that it's now easy for the other side to take back control. So yeah, maybe we could have gotten it to 863 or 866 or something like that, and that would have been a nice win. But now trying to top tick a slowing down market, it's pretty unlikely, right, that we would have been able to do that there appropriately. So once you get that reason to get out of your trade, just look to close it right on the uptick instead of closing it on the downtick, and then reset, get impartial, and you can always try again. Probably the only trade I feel like I maybe missed was this 64 breakout on the 5-min time frame. And the 3-min time frame, probably the only thing I felt like maybe I could have left or left a little bit of money on the table. NQ on the 5 is interesting though. So you call that like a breakout, low vol pullback, find support there off of the opening range. Maybe we could play this variant, right? The low vol pullback, stop loss at the ORB midpoint, which would be that ORB red line. So you'd have it set up like this. Now, I want to make sure, right, that for me to be able to get my position sizing, I'm getting within 25 points, right, of the low or of my stop loss location, right? So I can tell kind of cheater style here, right? Today's range size is 52 and a half. So half of 52 and a quarter, sorry, is like 26 and some change. So I know I need to go at least a point under the opening range high, right, as my reference point for my entry. So I'm going to look something along there, right? That like under 1875, I'm just going to go under 18. Otherwise, right, I'd have to be relying here on the aggressive entry technique, which I'm not opposed to. But again, right, I'm right on the cusp there of that 25 points. Just got to make sure, right, that my math is mathing here. So now stop would be H21. And this would just be a simple 1 contract play. And now this pullback's happening too quickly, so I'm going to be patient. And we can go back to thinking about the pullback entry. So 793 now would be the stop. We need to see still a little bit of a deeper pullback. Like 18, right? 18 is the number here. Okay, starting to watch. I saw 1675 for like just the briefest of moments. So let's try again. All right, guys. So I'm in 8:15 on the dot. Long, one contract. I don't know where my dings have disappeared to. All right. So far, so good. Quick $200. Come on, show me some more strength here. Weak close. Guys, I've closed this trade. I probably shouldn't have now. Closed it literally right before it popped. It's a bit unlucky. I closed it at 8:18.25, literally 2 seconds before it gave us a decent sized move. So a bit unlucky there. Again, just really trying to follow my rules. Classic, right? Classic. That's fine. Sitting on almost $300 here on the day. Nice work, AJ. Really well done, man. Really well done. Exactly what we talked about yesterday. Fantastic. I feel, maybe a little bit stupid for closing that where I did. Let's go, Kiki. Nice job. But that's okay. And like I said, I'm trying to overcorrect for just discipline here today. I'd be a little bit interested. I'd want to probably break down under this like 935 candle. Otherwise, I'm kind of getting that fine support off the opening range high vibes like we just played there on NQ. So 10:03 to 10:05. So what I'm gonna try to, I'll do a bit of a spoiler here, but I want to make like a bit of a DTR playbook. So what my objective is to basically create like a living journal. I was trying to find the right word for it, where I show you guys each trade, right? What the setup was, right? What the confirmation of it was, what my entry was, what the take profit was, and then what price action did after. So a screenshot, right, of the entry, a screenshot there of the exit with kind of like the post trade information, and then basically turn that into a playbook, right? So then if you go through the Discord channel or wherever I choose to host it, you can search up low vol pullbacks and you'll find all the examples, right, of low vol pullbacks, or you can find or search up ORB breakouts, right? And you can find all the ORB breakouts. I think that would be a pretty valuable resource. So that's sort of what my objective is to do for the trade recaps. I think that those are going to be better than the videos, or they'll be more useful than the videos. So if you guys have any feedback there, would be obviously open to that, but that's sort of my base idea. Basically, my concept here, or my thought process, is if I spend more time journaling and sharing my journal with you guys and doing all those things, that more people will do it themselves, and they'll also see more improvements to their trading. So the reality here is I feel like I'm going to journal my way out of my like losing streak at the start of the day, and I'll find the pattern faster doing it this way. Yeah, definitely closed a little bit early. That's fine. How's everyone feeling? Nice work, Jared. Yeah, for sure, Dan. Right, we want to make sure that we're buying the best discount we can, right? Not just the first discount. So yeah, I for sure agree with that. I'm working on it, Manjeet. I'm working on it. For me, it's not a good feeling as well, right? If I'm making money, you guys are losing money, or I'm making money and you guys aren't able to replicate those trades. It's not the social contract we have here. Yeah, it was a good close. It was just like kind of cruel that, literally like the moment it executed, that I got out. What was your entry price, Dan? So Dan, right? We entered that trade at 8:15. So if we're saying that we're in at 8:15, you can't be buying long, right, at 8:40 after we've exited that trade. That is beyond chasing our setup. We want to make sure, right, that when we enter our trades, we're within that green line to red line, right? In this case, you were much above that, where your risk on this trade would have been almost $1,000, right? While my risk on that trade was like closer to 400. So you've got, 120% more risk than I do on that position, which is a very losing proposition, right? So your objective when I call out my price is to get a better entry than that, not to get one 25 points higher. You're not going to make any money doing that, man. Yeah, a little bit, but it's not a low vol pullback into this range, and we don't have that reversal candle here yet, right? So the difference between the NQ and CL, right, is NQ, the preceding pullback was on lowest volume of the day, and then it was a high volume reversal. On CL, this would have been a low vol pullback, but then this candle doesn't find that confirmation support. This one isn't a low vol pullback, right? It's pretty aggressive volume relative to the previous few bars. So we need to get some sort of volume standard, right, that now indicates that bulls are back in control. So maybe there's a setup trigger there, but we still require that confirmation. No, it's not that you should have taken a short, Dan, right? That if you don't get your entry there under that 824 or better, it should have been actually under 818 or better. Just means no trade, right? It means you missed the opportunity. So no, that should not have been a short. We just because we missed a long doesn't mean we have to go short, right? And yeah, pretty tight range here so far today. A lot of names kind of giving us slow moves. Without really a tremendous amount of kind of enthusiasm here so far. I'm happy to be green, 2 for 2. But no rush, right? There's no rush. If I can finish the day off on a green note, I'll be very, very happy. And I'm trying to be very deliberate here, right? Like being deliberate, being specific is the antidote to anxiety when you're trading. And the more you can focus on the reasons why you're placing a trade versus just placing a trade, the calmer and the smoother and the better things are going to go. We have a chance here. I appreciate that. Yeah, I want every day to be like this. So that's the ideal, right? I agree. It's better when things are calm and we start slow, but we start well. Yeah, I 100% agree, Kiki. I get that. It also becomes mentally draining, right? I think I said this in my video right last week, but it's basically like each day. Well, I need it to close strong candle shape, right? Strong volume profile. We're going to have strong volume profile here. So I'm looking for it to close as a most bearish, second most bearish, or normal body bearish candle. Didn't quite get that there on the 3-min, so that's why I'm waiting here on the 5. So I'm looking for a strong close here. but yeah, like when we're having those 15, 20 trades a day, right? We're trading at like the very edge, right, of what our mental capital limits are. And then once a day or a trade goes against you, where you take a loss that's bigger than you want, or you miss a take profit or whatever, it just exaggerates those emotional feelings so much. And so, yeah, it might feel really good, right? Getting back to break even or making some money on like one of those billion trade days. But in reality, I think it just sets you up to make a mistake the following day to give back that P&L anyway. So it's kind of like it's kind of a double-edged sword, right? You can take the loss here today. You can take the stomach pain here today, right? Or you can take it tomorrow. So yeah, really trying to focus on the quality of my decisions, not the quantity of them, and allow basically markets to pay me out, right, when it's appropriate, instead of needing that validation from each and every trade. That makes life easier. For now, Ajay, for sure, does seem like that 64 is acting like support. So ideally, right, we're probably going to want to see this to turn into like a 2-candle confirmation now, where you get some sort of breakdown under 64. But price action is just continuing to consolidate here. I mean, maybe it could be setting up for another low vol pullback type entry. We've not really invalidated this price action here yet. We've just not really moved away or from it. Yeah, again, being very patient here, not in a rush to do anything crazy. Anyone have any nice weekend plans here? Nice, Aj. Is this for your kids' team? That's sick. How old is your kid? What age group? 7-year-olds. All right. So they know just enough how to run bases, but not how to throw out someone at second. That's the chaos stage still of baseball. That's fun. Yeah, of course. Yeah. You want to just hit dingers. Yeah, yeah, of course. The TikTokification of baseball. Their favorite team is the Savannah Bananas instead of like the Yankees or the Cubs or something. Hell yeah. We got a few hockey fans in here, Corinna. All right, so still kind of watching here. Not like a super high probability I'm going to take this trade, but just watching, having this boxed in. Sorry, Logan. Maybe if you guys can win more than like 5 games in a month, we can get them back included here. I get that. Yeah. Oh yeah. No, sorry. It would be just the midpoint of the opening range. Sorry. You're correct. You know what? There's obviously pros and cons to every stop loss technique. Using the midpoint of the ORB, maybe make some of our entries more fake out proof. Something to think about. Yeah, I'm still gonna be patient here, team. I'm gonna want to see outlier volume again before I do anything aggressive. Otherwise, I'm just like feeling like we're gonna be stuck in a range from 850 to 804, which is fun as that would be to scalp that away. That's very mentally draining price action for low probability moves. So I'll see how long this consolidation basically wants to hang out for, and then we can make a decision. So I need a personality change, right, to indicate that hey, we're done with this chop. Yeah, still just hanging out here. Not much going on. For not many reasons, right, to want to be aggressive. We're seeing things being pretty stuck here. That's fine. Yeah, it certainly seems like a consolidation pattern. But now maybe we're getting that like breakout of that consolidation to the downside. If we could go green to red reversals, right, that gives us probably an easier expectation of getting decent follow through to the downside. So we talked about, right, the implied range here today being about 1%. We'd already were up about that 1% here, right, in the pre-market. So the day's range here so far, right, including the pre-market, is approximately like 1.5%. So based on the implied volatility, right, we're getting a reading of maybe it's a bit toppy, the price action. So this could very much be setting up a red, sorry, green to red reversal, which would be the low vol fake out, right? Bullish failure and then breakdown trade. Maybe not with these confirmations, but it did break. It didn't hold. So again, now we're waiting, right, for break and hold of that area. CL continues to just stay stuck. So kind of a nothing day here. I'm thinking about if I were trading like I was last Friday today, this would be a very, very stressful market because nothing is moving, right? It'd be easy to kind of get into that like tunnel vision mode. Nice work, Brooke. Yeah, call it a weekend, man. That sounds fantastic. Good week overall. All right, that's the very responsible thing to do. I'm sure she would appreciate that. Dinner parties are a good time. You'll have a blast. All right, so now we're looking, right, for a breakdown under the previous low. Teasing. I'd say not good enough there, right? So again, pass on the burden to the 5. So yeah, we're still hanging out for now here, team. Officially, yeah, not enough yet. Yeah. CL, I mean, pretty good. We avoided that. A really pathetic range here so far on the day. So, I mean, for now, inside bar on the 10. Not enough volume on the 5. Inside bar on that as well. 3 min, decreasing volume here as we're getting back and towards that sort of pseudo range. This is kind of just like maybe a channel at this point. CL, we're going to struggle to probably get back to outlier volume here now. Well, maybe not. Would have to probably get up above high a day. All right, so that would have to be the breakout trigger. So it's 72, I think. Yeah. So we got 12 cents, buck 40. Oh. So still 10 cents to go on CL, right? 12 cents now. Might be a multi-candle one again. Yeah, so it would need to be a close above the high a day. Because otherwise, right, it's we've seen price action get stuck at that point. So if the momentum is strong, right, we should be able to get through and hold that area. So maybe we have a chance here on this 5 min. and then we could target the ORB high. So 4 cents, let's see. It doesn't look like it's going to happen. At least not on this time frame. 5 cents below. Yeah, not enough volume. Yeah, so I brought it up probably a year ago. Someone was asking about it. And just threw it into the watch list, be able to look at it every now and then. The truth be told, I haven't had the time. I haven't found the time. I probably have had it, all things considered. But I haven't found the time to basically just back test on gold. So I don't know. Yeah, like how it would sync up with sort of my current trading, and if it would suit my schedule and all that kind of stuff. So yeah, for sure, it can be really tradable. I just don't know how my strategy and like my kill zone and stuff like that would suit it or fit it. And without having to back test or without having the time to have back tested it fully, it's hard for me to want to trade it. Like something like this, I mean, I could use, right? Because that's kind of, a running back test. But, the stats here that show up are far less impressive than the stats I get on an NQ, for example, right? It's like profit factor is 10 times higher. So there's just enough of a divergence that I can't necessarily explain or don't have the time to figure out the difference. And yeah, just don't have the interest then in day trading it. Not that it can't be day tradable, but I just don't have the information I need to make those decisions. And I'll be honest with you, John, there's a lot of like survivorship bias, right, with trading. You kind of just want to keep trading the tickers that you know and are familiar with. So, like my first 12 months of trading, I did Forex. And then for the remaining, or the last 12 years, I've been trading US equities, right? So that's what I traded when I worked at the fund. Um, so I'm just used to following those names and following those tickers. If I were to add anything, it would probably be like a crypto future, like a Bitcoin future or something along those lines versus a gold. So maybe we're back to watching CL here a little bit. It's within striking distance again. Nice, Rusty. That 2 minute is crushing for you. Love it. This one here, I'm guessing. Yeah, 100%. Height risk, you can increase your sizing, increase your P&L potential, 100%. Enjoy, Rusty. Have a great weekend, man. Not on the ORB, Ajay. On the mean reversion, I have, but not on the ORB. So I have these stats. Well, I never really looked at the 2 min time frame before. Or at least not until I started testing the mean reversion technique. That was kind of the first time I started looking at the 2 min as a time frame. So that's really the main reason. Like the last 3 weeks withstanding, most of the time I feel like the time frames that I'm trading on, I'm able to catch the moves that I'm looking for, right? And I'm able to get the follow through that I'm looking for. The last couple weeks, yeah, it's been fake outs, fake outs, fake outs. So, maybe there is some space, right, to test different concepts or to look at different time frames. But again, it's a lot of work. It's hard to find the time to spend, 20 hours back testing something. Pretty much the times I've had the opportunity to do that, it's basically just take a week off, go somewhere nice, and just spend the week right eating at taco places and back testing in an Airbnb or hotel room. That's kind of the process. The perverted view of a holiday. And all things considered, I actually don't take that much time off. I think one of the things about it, Rebecca, is that maybe one thing I didn't realize going self-employed versus working for a fund is like when I was working for someone else, like it would be a little bit easier to shut off. It'd be easier to turn your brain off and like not worry about things or not think about things because I knew that a paycheck was still coming end of the month or, you know, in the next 2 weeks or whatever it is. Working for yourself, you don't like you can't like run away from your problems for lack of a better term. They kind of just like follow you everywhere. So you just never like I find it really hard to shut off and to like completely detach myself. So like holidays are you still work, you still do whatever. It's also why like over Christmas, right? Generally over Christmas, I get to spend I mean, a couple of days with family, a couple of days eating leftovers, a couple of days basically doing like a deep dive on my trading. It's just because it's a natural time to do so because I don't stream for a week or so. Yeah, and it's kind of a double-edged sword because obviously it's awesome to be very passionate about what you do and to love it and to work really hard. But sometimes you will work yourself to burnout and you don't realize you're burnt out. And then I know from my own personal experience, I start to get pretty bitchy if that's the case. Everything's just like a little bit of a sharper prod in the ribs. Like just makes everything feel more personal. Yeah, it just sounds like you sent a market order instead of a stop limit order. So you want to make sure that you're using limit orders there for your stop loss, right? Stop limit, not stop buy. Stop buy in that situation would just effectively be saying, hey, get out now. I'm not sure how much more motivation I have to keep watching this. Pretty slow, pretty boring. 2 for 2, might just take it and run. Yeah, for sure, Ajay. No, Emmanuel, it's not what I said, right? But if you're not attaching a stop loss order to your trade when you're setting it up, and you're just setting one up after you've entered your position, you need to be making sure that you're using a limit price. Otherwise, your stop order is just going to close your trade. Yeah, it's like that Dave Chappelle meme where he's Tyrone Biggums in the classroom. You got any more of those? Any more of those trades? Yeah, of course. Enough enough YouTube binges, right? All right, so let me show you guys how to do this, right? So if I were to open up a paper trading account, place a trade, right? When I'm setting up my order, I'm setting up here and I'm attaching my stop loss price, right? So it's a conditional order. If it triggers at 21,830, it's going to stop me out there at that price. If I don't tick that button, right, and I just send a normal limit order, and then I do a stop order then as my next thing, it's going to act as a market order and close my trade because it's going to look at the position I have and just close two contracts. Right. So it'll effectively just behave like a market order. When I'm entering my trades, I'm clicking stop loss here, attaching a conditional order, right, to my position. And then I'm expecting to get executed, right, at whatever that price is. What do you mean, Rebecca? What appears? Send me a screenshot over DMs. Yeah, I mean it's real boring today, Mark. Everyone's still trying to catch up on Sammy and Ronnie arguing on social media last night. Jersey Shore changed my life too, Nick. Yeah, Gym Trade Laundry. Beautiful. No, go enjoy your day, Mark. Go enjoy your day. Got a great week, man. Yeah, I mean that's gonna be fun. Get him some nice gifts. Be the good grandpa. That'll be a good time. Yeah, you too, Mark. Yeah. So, Rebecca, I see your screenshot here again. Right, same thing. If you just want to execute some trades, it's not showing up in the paper trader, but yeah, you can set up that order, right? So again, if you set up your order window, so say you forget to set your stop loss right in your trade, when you're setting your position, you don't want to be doing a stop order, right? If you want to get stopped out, you want to be doing a stop limit like you shared. So if in my process, right, I forgot to, I keep connecting this paper trading account, it's going to drive me nuts. If I were to enter a trade, right, limit price here, stop loss, and I forgot to set this price, then you'd want to be using a stop limit, right, to set your price, not just a stop order. A stop order will behave like a market order and it'll just get you out. A stop limit will only trigger if it hits that price. Yeah, two small wins here today, Mike. Nothing crazy. Sitting on 287.88 per account. Yeah, but my recommendation is set your stop limit price first. Sure, fire away, Rico. Fire away. Right. So you should want in your process, right? First thing you're doing when you're opening up your order window, putting in your stop loss price, then putting in your entry price, right? And then playing around with your units. Okay. I mean, it looks really similar to ES, right? Really similar type of price action. Attempted to fill that gap, failed at 100. Here's effectively your trend line, right? From that low up. So if you're long, right, probably a crack under that like 96.60 area, right, would probably be the reason to get out. Otherwise, you'd expect it to continue to consolidate here and like keep climbing that trend line. That'd be my base expectation. Yeah, I mean, it's been green every day this week, so I can't complain. A little bit of a calmer trading week. I say that as a relative term. All right, this is just IPO'd, right? So no information here really of interest. I don't know anything about this company. So I can't comment more than that. I think that the implied price at the IPO was like 38 bucks, and then it opened up at 68. So a bit of an early squeeze here. But besides that, I don't know much about this company. Let's take a look. Oops. American Express. It's a little bit of a different chart, right, than what you have on the indexes. I would say this, yeah, 304 area is probably your resistance. Kind of looks like an ascending wedge up until that price. So I would say like this is probably your pattern, give or take, something along those lines. But 300 acting like a good element of support. If you get through that 304, you're going to be flying. So first day trading with 9 accounts. Yeah, don't try to fade those euphoria moves. It's not worth it. What price on Circle? Okay, that's all right. Let's go, Nick. Congratulations, man. What's that look like on progress on the account? That's freaking awesome, dude. Nice, man. $1,500 on the week. Well done. Send me those trades, Nick. I'd love to take a look. All right, let's take a look. Not sure if I agree. At this point, right, I would need a breakout above high a day, which for sure could happen. Good volume on this 3-min. But I would need that breakout through 66-ish, so right around here. Break and hold on increasing outlier, which we should have. Again, main problem here, even if I do get that breakout from 866, my target's going to be 909. Going to have 40 odd points, right? To be able to get this trade. That means I'm going to need a risk of less than 10 points to be able to justify this from a risk reward perspective. That's going to be hard to do. Or it's going to be hard to get based on this initial reaction, right? That's already a quick 15-cent pullback, or 15-point pullback, sorry. So I might struggle here just a little bit. We'll watch. Oh, 50 cents, 10 points. Or 50 seconds, 10 points. Whoops. And if it doesn't happen on the 3-min, right, we can also see if it happens on the 5. Seems unlikely to happen on the 3 here. 5-min might give us a little bit of a larger range to target, which again could give us a more or higher probability of getting the position sizing, right, or the risk reward ratio we need. But so far, that reaction to the high of day breakout has been far from enthusiastic. All right. Kind of, it's doing some bullshit. I'm not gonna give this any more attention or energy. Yeah, I'm not gonna place anything else here. So any questions here, team? Anything you guys want to go over before call it for the day? Um I wonder, Nick, if you're maybe on the September contract. So if I go like, because the roll is happening pretty soon. So if I look at the September, which would be this one, maybe it looks a little bit different. To be NQU, not sure. Send me a screenshot because that, I mean, it's a little bit suspicious. Sounds good, John. Yeah, all right, good decision. Some wacky bullshit out there. So is life. All right, so yeah, final call for questions here, team. Final call for questions. Yeah, you too, Jeff. You too, Mike. Good weeks for everyone. Yeah. Nice work, John. Sorry, Jonathan. Apologies. You have a good weekend too, mate. All right, sweet. Well, if no further questions, I'm going to kill the stream here for the week. Have yourselves all a fantastic weekend. We'll be back at it again on Monday. And yeah, hopefully we can kind of keep finishing off the week here with a bang. But well done here, everybody. We survived another challenging trading week. And we're stacking them up. So I've been adding Tradeify accounts. So my last two that I've gotten funded have been with Tradeify. Anything else here, team? Yeah, you too, man. And that puts us right on, what's wrong chart? So how many green days in a row? 1, 2, 3, 4, 5, 6, 7, 8, 9. So Monday, right? We push for 10 in a row. And see if we can get there. P&L's been a straight line here recently. It's been an emotional roller coaster, but a straight line higher. And let's see if we can get that divergence to stop, right? I'm not superstitious, Ajay. You can't be a superstitious trader. You're gonna find too many reasons to screw yourself over. All right, guys, have yourselves a great day, and we'll talk soon.